In this video, we will continue to talk about ENDO International plc. It's an Irish pharmaceutical company that recently gathered a lot of attention from the public and also the stock market stakeholders. In this video, by the way, I'm changing my format a little bit, as you can see, especially when you compare it from like my previous videos, because I will, of course, be including the charts, but also putting in some B-rolls. On one hand, it's better looking, in my opinion, and also because it kind of reminds us that things are interconnected, especially when it comes to stocks. Even when we think that one doesn't have any sort of relationship with the other, at the end, as far as the economy is concerned, money circulates amongst different sectors, from one continent to another, from one pocket to another. So, ENDO International filed for, corporate restructuring, which is a very nice way to say bankruptcy, last week. And they seem to have reached an initial agreement with their debt holders. And the price action was appealing from the get-go, right? This company fell to very low levels, and recently, even before the bankruptcy, people were thinking that this company could go to much higher places. Of course, the bankruptcy kind of changed the outlook somewhat. That was the initial reason why I got interested in that stock, just like many other people. I would say that at the time, my conclusion about ENDO was that, even if you're very skeptical about its ability to make money in the current environment and in that kind of sector, the downside is very limited. It's a sub $1 stock. So how bad could it really get? Well, guess what? The downside just got lower. Significantly so in terms of percentage as well, because of the sudden news. As things stand, ENDP is besieged by many different sides. Sides that normally are supposed to work together, but sometimes we don't really care about what other players are hoping for, right? So we only care about our own interest. The market is currently a little bit lost. The regulators have said, they infringed our rules. The lawsuit is an impending sword on top of their head because we don't know how the whole restructuring issue is going to pan out yet, okay? Nothing says that a year from now, ENDO is going to get back on its feet and start operating once again. Like, this thing could take a while before we sort it through. At what cost? How much the equity is going to be diluted? Or are we going to keep the same shell? So on and so forth. Currently, it is too early to tell. But I'll promise that I will keep following on this issue as we go forward. The other things are our own emotions, like the stakeholders or the traders. When we look at ENDP, we have our own fears and also our expectations, if not our greed. So when we looked at the stock getting below $1, my first impression is, well, if it's that low, the downside is certainly smaller than the upside, right? Because the upside is theoretically unlimited. And also our fear. When we read the word bankruptcy or restructuring, usually what this means is that they're trying to save the most critical parts, but the equity might be wiped. And because of this, people might have been coming in because of FOMO and then going out because of fear. And this is the least healthy attitude to be had in a stock market to begin with. But of course, we're all humans. Those listening, we're all humans. And we all have those weaknesses. So we have to kind of own it, right? We have to own our own weaknesses and to carry along. It is a risky sector to operate in to begin with. The pharmaceutical industry is known to bear a huge amount of risk in order to begin the operations, because you don't know if the products are going to be authorized by the regulators. You don't know if all the tests will pan out anything that is conclusive. And once you have those products that are accepted by the regulators, it's possible that a company gets sued as well. So this is the case for Endo. It was the case for Purdue. Do they deserve it? Many people would say yes. Some would say, maybe they were a little bit harsh, but which side are we on, really, right? What are the odds that we say that's a little bit harsh because we own the shares? So for those kinds of things, we have to read the current events as they should be read, meaning as a very matter-of-fact approach, but also to kind of ignore the noise that is surrounding it, because this is going to confuse our senses and to lead us to make wrong choices. So yeah, it is a risky sector to begin with. The market is also less tolerant and more volatile. So we are in a state of confusion, in my opinion. The market has fell down significantly from its peaks. It's not sure where to go next. Possibly because, first of all, the federal rates increases might have been priced in for many people. So if they decided to sell, they might have sold already. The other thing is, as the markets get more volatile, the world is also more volatile as well. So given that we're now trading like the American stock market, a lot more capital might flow in from abroad just because it's even less safe out there. And this is why I would say that the market is in a state of confusion. They're not sure how far the correction will still go, and if the correction will still go. I think that it will, just because it's way too small as a correction to be called like a recession or a significant stock crash. I remember checking last time the total stock market. So if you want to look at it, you can check VT, the ticker symbol VT. It's a Vanguard security tracking the entire equity market around the world. I think they were tracking the market around like at least the 5 continents in hundreds, above 100 countries. And they were down for about 20 to 30%. I mean, in my opinion, this is still too early to say that the correction is behind us. I think that more will come, or more grinding towards lower levels are going to come within the next 12 to 24 months. Of course, that's just my opinion. It may or may not happen, but we do have to prepare for this kind of scenario because it is likely and to be expected, in my humble opinion. The other thing is, as the market becomes more volatile, the society becomes, like less money is circulating. Some players or some members of our society or some stakeholders could become more hungry because there's less money coming in on one part, so they have to plug in that hole one way or the other. Some of these may include to start a class action lawsuit, right? I'm not saying that this is the case for ENDO International necessarily, and lawsuit is far from the only example. But my point is, the society would try to look inward instead of looking outward. When additional expansion is no longer possible, we look at what's behind us and try to, maybe scrap a little bit of money from here and there. This is the kind of things that could happen within the market as well. So it doesn't just happen when people are out of job and then, crime rate would increase and so on. This is just one possible scenario. The other types of scenario that we could see is that lawyers get hungrier. Investors out of money could get more aggressive. So this is why ENDP is also in a delicate situation. And in fact, more than delicate. I would say that they received the full blunt force of a class action lawsuit, which ended up causing the restructuring. Now, let's also take a look at the price actions. the recent one and the historical one, I would say that the immediate reaction of the market was a lot more resistant than what I initially thought, because it seems to have parried well the consequences of a bankruptcy announcement. And now it seems like the reality is slowly getting back to the company. This is a bit like, imagine if we were in a company and this company just laid off the entire floor. Well, initially the reaction might not be super sad. It might not be super negative. We might have a certain sense of euphoria that we're all in this together, that things are going to get better at some point. Like this kind of feeling is difficult to describe, but for those who have lived through it, you might know what I'm talking about. Like the initial few seconds may not reflect what's going to happen afterwards. Like once people get home and then they realized, oh, something really bad just happened, right? So last week, we were not there yet. But I think that this week, this kind of reaction or this kind of mentality would reasonably start to set in. As we speak, the price action is historically low. And if you're looking for a good entry, I would say that with a lot of caution and skepticism, and also having a lot of, reserved allocation for later buy-in, it might be a good entry point. So, which kind of investors would be fit to buy ENDO in the current state? I would say that these people definitely have to be risk-taking, so very risk-tolerant. Like, they're not afraid of risks, they're not afraid of emerging markets, they're not afraid of navigating in very muddy water or uncertain waters. They also believe that the bottom is now. Like the bottom has been reached now. After such sharp sell-offs, the market overall is poised to recover. They're also very diversified. So they have to have a very diversified portfolio to be able to tolerate a small blip in their position takings or their risk takings. Because if half of your positions are in ENDO, I wouldn't say that this is very diversified. If you only have 3 to 5 positions in your portfolio, that's also something to reconsider in my. So the current downside is between 35 to 40 cents per share, and theoretically the upside is infinite. The only kinds of fundamentals that would be relevant for the stock's future are how well or bad are they going to carry out the bankruptcy. The rest is not relevant for the time being, and I would say it won't be relevant for the foreseeable future. Something to note is that this stock is certainly for short-term trade, as the long-term holdings would require additional assurances from the market. The market needs to tell us, okay, we think that the worst of the storm is behind us. I personally think that it's not, that it's way too early to call it a bottom, that this might be a fake recovery before things go further down. Now, something to also note is that for people who aren't buying those shares, I would recommend you to be careful about reading content regarding ENDO online. Because you will see many people saying, okay, I just bought tens of thousands of shares, let's go to the moon, we're stronger together, and so on and so forth. I have seen this in many different scenarios, and in my opinion, most of the times, you're better off listening to your skeptical side. So, it's not because many people have bought a lot of shares on a failing company or a company with failing stock price that it's necessarily going to bounce back. You see what I mean? Because people who have liquidated their position in ENDO, people who have sold at a loss, they're not going to brag about it online. They're not going to say, oh, you know what, I lost a bunch of money. Please congratulate me. Please upvote my Reddit post, right? This is not going to happen. And I have seen countless examples of people trying to getting in a stock after a crash, trying to play the rebound, but it didn't rebound. There are plenty of stocks that just simply fell over time, and it just doesn't stop for about like 12 to 18 months or so, maybe even more. Like, for instance, if we think of like a stock that took a long time before bottoming out, I would refer to Hyliion. Hyliion started to crash from September of 2021, or of 2020, I'm sorry, of 2020 to nowadays, right? Things haven't been great for that company. I can't tell you how many people were saying 2021 is going to be our year. Well, guess what? It wasn't. It really wasn't. So, my point is, you have to trust your own gut instincts. And if you don't think that things are going to get better anytime soon, trust it. And if you want to buy tens of thousands of shares of ENDO or of any other tech company or growth stocks that have recently fell from grace, ask yourself, can you afford to lose this amount of money? If you can, then be my guest. Please contribute your part to the great financial market. But if not, maybe consider more prudence in how much money you're willing to allocate to this one position. I would say around 1% is the maximum that I think is appropriate for the time being. And we shall see how things are going to go from there to determine if it deserves more of our capital. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect in investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up, or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, When it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.